Hello, this is David Bratanek with Coldwell Banker Southwest Realty. Today we're going to go through the March stats of what happened in March of 2023. As usual, we're going to compare it to February. We're going to compare it, see how we're doing so far this year, and we can compare it a little bit to last year. So without further ado, let's get into it. So the quick snapshot here is the average sale price for March. Forgive me, I do have my sheets in front of me. Was $527,827. Now that's down about 7% from March of last year. If you remember last year, February hit a real big peak and March was a little bit lower, and then April dropped off. And so we saw prices skyrocket at the start, and then they slowly trickled down as we saw the interest rate increases over the past year. Now that is sort of stopped. They're saying that they're probably not going to be increasing the rates any more than they currently are unless something changes, because we're seeing inflation numbers already come down. And what that's meant is since January, every month we've seen an increase in the average sale price. So for March it was $527. For February of this year it was $482. So there's a pretty big price increase, and $476 for January, which was a bit of obviously the lowest part of the year, but things have been on their way up ever since. Comparing February to February, prices were down about 20% because both that was the peak of last year to kind of not really the trough, but on its way back up. So we did see that price differential. If you've purchased in the last year, like if you purchased in January or February of last year, you might want to hold on to your house a little bit longer until these prices recover, but they do look like they're recovering quite quickly, and I think we're going to see that sort of upward trend for the rest of the year. We're seeing the bond yields are down, which means that the fixed rate mortgages are down, and now the last I heard you could get a 5-year fixed at like 4.5%. That some places are offering, others are closer to the 5%, 5.1 as their advertised rate, and oftentimes those rates do come down a little bit from their advertised rate. So as we see, if we continue to see this trend or even just a leveling out of interest rates, buyers have already factored into it. They're qualifying for these rates, and so money is coming back into the real estate sector. As for total listings, about the same as this time last year, 207 new listings in March of 2023, 200 in 2022. So that's up about 3.5%. Year to date, though, we've got about 28% more listings than we did last year, or we've had come on the market. That's a good sign. What we were looking at last year, if you remember from some of the videos, is I just kept saying we need more listings, and we had a huge shortfall. And right now we're seeing kind of the opposite. We've got lots of listings on the market, and that's part of the reason that it's pushing those prices down a little bit from where they were this time last year. Sales were also down year to date by about 13%. So far this year we've sold 290 houses. Last year it was 334. So we are down about 13%, as I said. The average sale price year to date is at $499, $475, and the median sale price at $454.9. We always expect that the average is going to be higher than the median. In comparison to last year, that's year to date, we're still down about 13 to 14%, depending on the average and year to date, or average and median prices that you're comparing to. Overall, what I see for the future of this market this year is just as I said. I think we're going to see that interest rates are going to stop increasing, inflation is coming under control, and things are kind of going back to normal. What they're kind of saying is maybe at the end of this year or early next year, rates will start to decrease, and what that's going to do is funnel a lot more money into real estate as borrowing becomes cheaper. People will be able to qualify that couldn't previously qualify, or qualify for more money, and that's going to get spent in the real estate industry. So I think it's a good time to buy. As I typically say, the best time to buy or sell is whatever's right for you. If let's say you did buy this time last year and you're going to take a bit of a haircut on what you've purchased or what you currently live in, but the thing is, if you sell it and you're buying another house, you're also paying a lower price. Raising prices doesn't always make much of a difference if you're kind of trading houses around the same value mark. If you're upsizing or downsizing or getting in or out of the market, it makes a much bigger deal. But if you're doing kind of lateral moves, you shouldn't have any problem right now. It actually gives you some breathing room because we can put in those condition of sale of buyer's property, and that makes it a lot easier to negotiate on how on your house selling. Being able to have that condition has brought in a lot of people that previously couldn't buy houses because they couldn't take the risk that their house wouldn't sell. And now those people are back in the market. So if you have questions about your own personal situation and you'd like to reach out, you can give me a call anytime, or reach out through YouTube, Facebook, or email me at david-bratanek@coldwellbanker.ca. All of that is in the description below, or on my Facebook business page if you're looking at it there. Thank you so much and have a great day. Thank you for watching my video. Please like and subscribe if you'd like to hear more from me. If you have comments, please leave them in the comment section below, or contact me. All of my contact information is beside me and below me in the description. Have a great day.